Palantir reported third quarter 2024 financial results that are sending the stock price soaring. It's up over 20% on the day after these results were announced. So in this video, I'm going to review these results, highlight what was so strong about them for Palantir stock investors, and then I'm going to update my buy recommendation for Palantir stock. Coming into this earnings release, I had the stock rated as a hold. My reasoning was that the price was already so expensive going into the earnings release that there was downside, that there was more downside than upside following the earnings release. So following the results, I'm going to return to that recommendation and let you know if I'm changing it or keeping it rated as a hold. So let's take a look at these results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the big financial highlights for the quarter was that U.S. revenue increased by 44% year over year for Palantir to $499 million. But more importantly, U.S. commercial revenue grew by 54% year over year to $179 million. This is the segment I've been talking about for a couple of years now with Palantir. This is the segment I feel has the biggest upside for Palantir is commercial revenue. We all know Palantir does great with governments, especially domestic governments. But the question mark was, can it expand into more businesses? And the big constraint there was the price for its service. It was no doubt the best in class, but it's expensive. And so not very many businesses can afford Palantir's services. But with this new strategy, with the bootcamp strategy where Palantir has been going in and demonstrating its services, sort of like a free trial for businesses. And then once the business sees what Palantir can do for the business, they can increase their budget. Their willingness to spend expands considerably, and they've been closing deals at an accelerating rate. And that's really what's fueling this better than expected growth from Palantir. And this is what's unlocking so much value in Palantir. They've done an excellent job with this strategy, and it's worked, I think, a lot better than maybe they even expected it would. Overall, revenue increased by 30% and 7% quarter over quarter to $726 million. The company's adjusted operating income of $276 million means that it generated an adjusted operating margin of 38%. They were profitable again on the bottom line and generated an operating income of $113 million and a GAAP net income of $144 million, which is good for a 20% profit margin. Remember, they've only recently turned profitable on the bottom line, and they haven't looked back. Their profit margins have been expanding robustly since they turned profitable on the bottom line. In fact, GAAP earnings per share increased by 100% year over year to 6 cents a share, up from 3 cents a share in the same time last year. They've done an excellent job controlling costs while revenue has been increasing. And surprisingly, this new strategy of going into businesses, demonstrating their capability, and then signing deals, it hasn't led to a decrease in profit margins. It's actually supported profit margin expansion. So that's great to see when a company develops a new strategy and the strategy immediately starts resulting in positive profitability, positive cash flow, positive revenue all together. A lot of times you see these new strategies, they might lead to increased sales, but they'll come at the expense of profit margins while the company calibrates the size and scope of the strategy. That wasn't the case with Palantir. This strategy led to increasing revenue and increasing profitability simultaneously and almost instantaneously. It's rare to see a new strategy working this well and at this scale. So kudos to Palantir's management team for pulling this off. They've done an excellent job. One of the big deals it signed in the third quarter was a new 5-year up to $100 million contract to expand its services to the US military, artificial intelligence, and machine learning. And they've continued to demonstrate success with governments. I'm not concerned about Palantir's business in this segment. They are the best in class, and the governments, the military, they want the best in class service and they have the budget to pay for it. One other thing that's working in Palantir's favor is the US military. The budget is massive. I believe it's approaching $800 billion now. And the allocation between hardware and software is so much skewed towards hardware that it's going to shift to software over the coming decades, and that's going to work in Palantir's favor. Software is becoming more important strategically for militaries, and that's going to work in Palantir's favor as militaries boost their capabilities in artificial intelligence. So this is the segment that I was paying closest attention to, is Palantir's US commercial revenue. And it was great in the quarter. The commercial revenue continues to accelerate along with their AIP, which is the new strategy, the bootcamp strategy. Commercial revenue increased by 54% year over year, 13% quarter over quarter, and year over year commercial customer count increased by 77%. 77% growth. That's really impressive. Remaining deal value increased by 73% year over year and 7% quarter over quarter. So it is slowing down somewhat, but still 73% year over year growth in remaining deal value. This will eventually turn into revenue. Like I shared with you, the deal with the government, Palantir signs these kinds of deals where it's like 5 years, 100 million, or 10 years, 200 million. When they sign a deal like that, the 100 million that is the headline number that you see, that's not the number that goes into revenue. That's the number that goes into remaining deal value. And then as Palantir performs the service, remaining deal value goes into revenue. So that's kind of where and how the money moves around Palantir's accounting statements as the company signs contracts and then performs the services that it signed in those contracts. And this is really indicative of the opportunity ahead for Palantir. Look at their US commercial customer count. I talked about how it increased 77%, right? And you look at that number and you say, wow, 77%, big number. But if you look at the actual number of customers they have, it's only 321. And that increased by 9% quarter over quarter. This is why I've been talking about how big this opportunity is for Palantir. There's millions of businesses in the US, and they only have 321 as customers. And that goes to highlight just how expensive Palantir's service is and how unaffordable it is for the vast majority of businesses. But that's not going to be the case forever. As Palantir learns how to deliver its service at a lower cost, as Palantir demonstrates its capabilities, more and more US businesses are going to look to Palantir. And so this opportunity will continue to expand. Right now, it's very, very early days, only 321 customers. But what you like to see is this growth. This growth demonstrates that the service is really good if they can perform the service at a lower price, or if they can demonstrate the value they add for business, the budgets will increase and they can grow to serve more businesses longer term. Now, is the stock a buy? Well, coming into the quarter, I highlighted how the stock was a little too rich for my tastes in terms of its prospects longer term compared to the valuation. And that was when it was trading at a forward price to earnings of around 80 or 85. After the earnings release and the stock price jumping by more than 20%, Palantir is now trading at a forward price to earnings of 117. No doubt the company has excellent prospects. It's a great business in a category that's expanding in an excellent market. The business model is lucrative, good leadership, etc., etc. Looks great. The valuation, though, is just so expensive that it feels like all of those excellent prospects are already priced into this valuation. So I did have Palantir stock rated as a buy earlier in the year, and I downgraded it because of valuation concerns. I've done that a couple of times with Palantir because the valuation As soon as it gets to an affordable level, it seems like it just bounces back up real quickly. So you don't get a very long time with this stock to get it at a good valuation. It seems to be trading at an expensive valuation for the majority of the year. Still, I don't like to pay these high valuations for stocks that are looking ahead so far into the future for the value to justify itself. So for that reason, I am keeping Palantir stock rated as a hold, and I updated that today, November 5th. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.